Hi there. I'm gonna go over the trade that I missed in the morning session. Actually, I was not trading today. I was at my work, shift from morning to the late evening, so I don't have the time to trade. So this is just the daily time frame. Price inside the 5 hour gap. Beautifully respected. Failed to close. Uh, uh, it's just looking up the 5 hour gap close inside the seller's 5 hour gap, and we can clearly see the equal lows, which is nothing but the liquidity, which is the liquidity pool. So yesterday it actually it's Wednesday, beautiful sell off inside this 5 hour gap. So in the morning, um, in the morning it's 4 hour candles. Morning, at exactly at 7 o'clock, I guess. I see this impulsive move to the upside after sweeping all those liquidity to the downside. So after seeing this impulsive move, I'm pretty confident this will not going to sustain since it is just an impulsive move or a news candle. I don't know, but it's just an impulsive move, just a 72 pips move in 1 minute after sweeping this significant liquidity pool. So the price once it so in the morning I projected like I'm gonna go sell, and if I'm taking any kind of trade today, it should be a short entry. I targeted this lows again, at least this low. So this was my plan from my mind, but I'm not doing anything since I have my work. So it's 4 hour. What happened today is nothing but price. Um, I just marked here because after the session, it's clearly visible for me. It's the 4 hour from 5 o'clock to 9 o'clock. Um, Once the 4 hour getting swept, and you can clearly see this fair value gap, right? This is the 4 hour bearish fair value gap. This is the daily fair value gap, holding the price, pushing lower. Fail to take the liquidity. Once the liquidity has been swept, price rebalance to this fair value gap again. This fair value gap completely get filled, but price close inside this range and give the big down close candle. Okay. Again, price retrace to this fair value gap, fail to close above, close inside this range. I just mark this fair value gap. Sorry, mark the 4 hour candle. What happened next? Price just um, pushing up all the way towards the 4 hour candle high. Once it sweep the high, price start to displace towards the downside. So I just move to lower time frame, 1 hour. Just just impulsive move to the upside after the liquidity. This is the 4 hour. Price failed to displace through the 4 hour fair value gap. Price rejection. Then take sweep this high. Again sweep this high. Then start to displace towards this low. In 15 minutes, I just delete this daily fair value gap. I just mark uh, this 4 hour fair value gap, which currently respecting, and this is the 4 hour candle high, right? This is the 4 hour candle high. So what happened here is just an impulsive move to the upside, print a significant low. This is gonna be the significant low for the swing. Put the significant low, right? And the price sweep the high above the 4 hour fair value gap, go all the way up, sweep the high, come all the way down, break the structure, close below, reprice. Usually I put my limit order, set my limit order exactly at this point or at the body, and I can add some position inside this fair value gap. This is my entry pattern if I was in this trade. But this trade uh, just tap this 15 minutes fair value gap. You can clearly see this, right? This it's break below, sweep, structure shift, displays through the swing low. This is just impulsive move to the upside. Okay, price reprice to this point. Leave this bearish fair value gap. The next candle go just wow, just um tab, just tag. Sorry, tab the fair value gap. The 15 minutes bearish fair value gap get tapped. Start to displace lower. Keep on bleeding towards downside, towards this low. And I can show you one thing. I have my projection, last manipulation candle before the structure shift point. Thank you. Before the structure shift point, last manipulation candle before the structure shift point inside the 4 hour fair value gap. Order flow is bearish these days, and daily fair value gap hold the price pretty bearish, and the reason for our Faraday also holding the price. No candle close above this range. It's this entire move. It's not actually a break. It's just a move to the upside and close below. It's all are big in the 4 hour time frame. These candles and these candles are all wicks. Uh, let's just go above and close inside this range in 4 hour. 4 hour candle close will you can clearly see all those things in 4 hour time frame. So you don't need to consider this as a break. This is a 4 hour fair value gap. You are not supposed to consider it as a break in 15 minutes. If you mark the 4 hour time frame, you should wait for the 4 hour candle close in order to take a decision, not to make a decision. Okay. So this is my projection. Once it break the structure, price reprice to this point, to this fair value gap, the break, the candle which give the structure break, price leave this value tapped, fill all the fill all the way down towards the low, and my projection beautifully projected this point. This area should be my first target, 2 to 2.5, and the fourth, this should be my final target. So if any trade inside this area would be played beautifully towards the sell side. So this is my first take profit, the midpoint of this range, 1:2 entry, stop at the swing high. Once it get displaced, I can move my stop towards this recent high. This is the extreme stop loss, and I can move my stop loss to this point. So first, according to this model, this should be my optimum stop loss. I don't like to see any price close above this range. If I get any kind of retracement, I don't like to see any candle close above. Uh, that should be my model. So this should be my first target, and this should be my final target. Both are attained beautifully today. So TP1 hit, TP2 hit, done for the day. Everything has been so far so good. 1 hour and 4 hour, you can really see that. It's still holding the price. It's just an impulsive move. Once the 4 hour candle getting swept, structure shifts, fell all the way down towards this range, 4 hour. You can clearly see where the rejection happened. You can expect a pullback or reversal inside 2 to 2.5. It might reprice to the equilibrium range, or else you can expect the reversal in uh, in 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 exactly at this point. This point will give a reversal. You can clearly see where the candle started reacting, start to give some rejections. Okay, this is just a 15 minutes. picture, you can go for a not a swing trade. It's kind of swing trade, like 1 or 2 days. You can hold this trade. Um, since I'm a day trader, I can zoom even further, dig deep into this trade. Just give me a second. Hydrate all those things. So in 15 minutes, I delete all those things. So I probably not taking entries in 15 minutes. I knew that. So I might be in 3 or 5 minutes or in 1 minute. So in 5 minutes, this should be my structure shift after the sweep. After this move, high, low. This is the first time some sort of low getting break, structure shift, the fair value gap getting tapped, start to fell off. There's a significant swing low in 15 minutes, 5 minutes, and 3 minutes, and every time frame. This should be the significant swing low. Broke below, replace to this breaker to this point, and weekly sell off. Sweep, structure shift, but there is no significant pullback in this rally. If you look for this fair value gap to fill, you might not get entered. If you wait for this fair value gap to tap, if you wait for this area to tap, so those are the places I can add positions or I can execute my entries. I can look for the price to reprice to that point. This is the maximum level price should come or might come if it gives some sort of pullback. In most cases, in this case, it's just ran through to the downside since it is the impulsive move. This is a 5 minutes, and this is not. It's pretty clear, but it's not done clear for me. In 3 minutes, you can clearly see, right? In 3 minutes, high, significant low, print the equal highs, swept the high, and this entire liquidity has been taken now. And this liquidity, this high also swept one more time. This is the first low, break and displaced. This or this, you can take this or this, getting broke and displaced. This is the fair value gap getting tapped. From this fair value gap, we have some 15 minutes time. You can think inside this range. So if I just if I too adamant to put my entry here or inside 50% of the range, I might miss this move. So always you should keep your entry or limit order uh, exactly at this point. This should be great, but there is no it's not much difference between this entry and that entry, right? So all you have to do, once you get the structure shift, once you get the fair value gap, you have to put your first entry here, and you can start pyramiding inside this range. Inside this range, you can start pyramiding. In this case, this is the significant swing that I like to see, that I hope to see break below and get ran through. But before that, I get structure shift and confirmation here. So after the sweep, price finally sweep one more time. This or this good should be my significant structure shift. Is going to be the displacement candle, leaving this fair value gap, getting tapped, start to fell off towards the sell side. That's it. And in 1 minute, if I if I zoom in even further, the candle should be look like this. So in most cases, I might be entered here and get stopped out at this point. So this will work and this will not work. I clearly I not clearly I most in most cases I understand that why it's working, why it's not working. So the reason why it's working, if you get the move like this, like give me a second, I'll draw something. It's not here. It's here, yes. If you get any move like this, if any price suddenly fell off like this, you can then this entry, which means this entry worked that day. So if any move like this, and it's right away start to sell off like this, which means This entry is a lower time frame, which means 1 minute or 30 seconds, whatever it is a very lower time frame entry. So structure shift, some sort of getting swept, structure shift. This is nothing but the 4 hour time frame. Um, I have about just about the 4 hour time frame, right? So this is the first time some sort of liquidity low getting break, structure shift, this final gap getting hold. So you might believe this entry will work or gonna work, but this is just a manipulation move. So why this is not working and this is working, which means this is just entry which is in lower time frame, very lower time frame in 1 minute, in 3 minutes, and in 5 minutes, and in 15 minutes. This is the exact manipulation move. This is the last swing sweep. This is the important significant swing low, and this is the parallel gap flip. So this thing will help to align the lower time frame to the higher time frame, which means in according to higher time frame, this is going to be the structure shift, right? So when you align the lower time frame to higher time frame, especially 1 minute to 5 minutes or 15 minutes, you can be pretty um, sure about your trade. You can be confident, or you can have some good conviction. You can trust the trade, in other words. So this is the reason why this is not working. This is working. This is just a move towards this fair value gap. This fair value getting tapped, uh, and this fair value gap getting tapped and pushing the price towards this high. Once this high getting swept, this is the internal. That internal also swept one more time. This is the significant swing low. Sorry, this is the significant swing low in 1 minute, getting break, not only break but also displaced. So this is the 1 minute structure shift after the manipulation. This is just a manipulation move. Price rebalance to this fair value gap. Once this fair value getting tapped, it started displace higher, flip the fair value gap, structure shift, and engineer liquidity swept, tap the fair value gap, go and take out all those engineer liquidity. Now it gives a real structure shift, high, low, swept the high, just a minor sweep, structure shift with the displacement, and price leave the fair value gaps, and this fair value gap just getting tapped, right? This is the you can mark this as a fair value gap. This is one fair value gap, and this is one fair value gap, and price just come and tapped, come below, and this is gonna be your soup for the day. This is gonna be your soup for the day, right? Why it is a soup? This is where the internal getting swept, started displaced through the swing low. So according to higher time frame, this is just a manipulation move for the fair value gap. This is not flip, just hold the price, pushing higher, take this high, low. This is the second structure shift which aligned with the 3 minutes and 5 minutes price action. High, low, sweep, structure shift here. Okay, just give me a second. Okay, didn't see it. It's very small. I don't know. It's too small. So okay, this is the structure shift displacement. I just marked this fair value gap. What the price here doing here? Come and tap the fair value gap. Goes again price engineer the liquidity, go all the way up, sweep, just sweep the internal. Inside the fair value gap, just sweep the internal, start to fell off. Structure shift, displacement. First accumulation, sweep, displacement. Second accumulation, displacement. Start to displace all the way towards the sell side. So the Wednesday, the yesterday I took on trade. This is exactly where I get manipulated. This is where exactly price give the real move. So yesterday I marked the 5 minutes where this is in yesterday, I marked this fair value gap which is in 5 minutes. All I like to say is I get the structure shift like displacement. This the same exact same movement. Price sweep the internals, give structure shift, and price rebalance to this travel gap getting hold sort of displace lower. I like to see the travel gap to hold, but unfortunately, it's the same move that was stopping me out. This Wednesday, I was in the live trade, and I might take my stop loss at this point, I guess. But this is what happened for me. Yes, exactly Wednesday. I understand that. Okay, this is a manipulation move in 1 minute. So once this high has been taken, and this is the significant low now. Once this high has been taken, now it gives us structure shift. Now it gives us a sweep structure shift parallel gap displacement, and this displacement just ran through all the swing lows, all these fair value gaps. So, yep. So always aware about this kind of manipulation move. So don't zoom too much into the model and enter very early. This is very early. This is the right moment. So all you have to do is just align the lower time frame with higher time frame. And also once you identify this manipulation move, once you sometimes it will work if the entry it's just a straight up one, just a straight dump. This is gonna be work, but here it's just aligned with just formed a lot of price action, especially in order to aligned for with higher time frames. So it's a entry for me for the day. It's really great. I didn't took that entry. I just not even a tape reading. It's just a post market analysis. Everything has been done. I just analyze it, just view the market afterwards in the late evening. I understand all those things. Okay, fine. I might entered here like Wednesday, but due to Wednesday, I took some stop losses. I understand that. So you are not supposed to trust this move. You can trust this move. It is also work. It's beautifully work. If you entered your position here, put the stop at the high. You can book profits until this point. This whole sell model completed here. If it is get flipped or getting displaced, then your entry is right, should be right. So this is just a 1 minute manipulation. 1 minute. This whole move is just for to replace this point. This is the real move. It is also aligned with high time frame. That's what I'm trying to say. What I'm trying to emphasize here. So that's it. I didn't took any trades today. No trading day. Just a post market analysis. All I have to do in following days, I have to identify the market movements, identify the higher time frame fair value gaps, higher time frame direction, and try to take trades like this, solid trades. Um, yeah, nowadays it seems really good. I had to be good with my draw on liquidity. I had to be good with my direction, uh, with my projection, everything. That's it. Have fun. I'm gonna close the trade. It's close the um, journal. It's almost 23 minutes. It's a very long video. I knew that. But still, it's a very important educational video. Like swept, structure shift. This is my model. This is where what I'm looking for every single day. This is the sweep. If I am uh I usually what I'm doing is I I keep my limit order here. Most of the cases, once the price give the structure shift, price reprice to this breaker. So I usually keep my um, limit order here, or the 50% of the fair value gap, or this fair value gap. If I'm doing those kind of things, I might not get entered. I might not uh, catch this kind of moves. So in this model, my optimal entry should be the break. This is the break. This is the first entry. Break, fair value gap, flipped, go above. It's very early. It's not right. I'm not gonna catch this kind of moves. So what I'm trying to say here is Once you get a structure shift with big displacement, draw a fair value gap, just entered here. Once the price tapped this area, just entered. Put the stop at the high. Let the price prove you are right or wrong. Whether you are right or wrong in your direction. That's it. I know once I enter, once I kept my stop, this is the extreme point where I expect, where I anticipate price will not gonna come, will not gonna approach my area. So whatever my price action should happen inside this range. So that is why I'm stressing here. This is the optimal entry point. I accept that, and you should execute your positions once you get the structure shift. Once the file is created, you have to put your limit order here. You have to set it. You have to enter it here. Put the stop loss at the high. Once the price replays to this range, you can keep on adding positions. You can keep on adding positions, not big positions. Just add, if you're planning to add one lot, which means you can put 0.3 here, you can put 0.3 here, you can put 0.3 here, which is pretty good and pretty solid, right? You can, by doing those kind of things, you can understand the price action correctly, and you can reduce the loss, and you can do all those things. That's what I'm trying to do every single day. So here it's beautifully played, beautiful entry, beautiful analysis. But I'm not in this trade. That's fine. That's totally fine. So all I have to, what I'm learning from for this week is, so I'm not. I need to find the direction. Once I find the direction, I might enter here, but I need to be very aware about this kind of movement. I might get stopped and before the real move, and I need to be careful about my entry. I'm not always look for this kind of entries like putting setting limit order at the breaker. It will not work. I have to mark the fair value gap. I have to enter once it get tapped, put the stop at the high, and I like to see what happening inside my entry, um inside my point of interest inside this range. So that should be great and good for me, and which will help me in the long run if I'm doing those kind of things. That's it. Have fun. Be safe.